Hello everybody, Tortoise Investing coming at you today with a portfolio update. We're going to be taking a quick look at my holdings, and I'm going to kind of go in depth with what my plans are with them going forward and how I plan on investing probably for the second half of this year. And also going to take a look at some things on my watch list that 3 stocks I'm watching very carefully and that may soon make their way into the portfolio as well. If you're new, hit that subscribe button for me. Drop a like down below. I greatly appreciate it. This Thursday, stay tuned. New best stocks to buy now will be coming out. So make sure you are subscribed so you don't miss out on it. None of this is financial advice. Always do your own research before investing. Without further ado, the portfolio, as you see here. Salesforce, we're just a little bit over $1,000. Salesforce is 18.7% up. United Healthcare 17% up. Starbucks, MasterCard down about 2%, and Celsius down 18.89%. So on Qualtrim Insights, this is how everything's looking with the 200-day moving average. Starbucks is still pretty down, and Celsius as well. With Salesforce, I intend to buy more if this dips back into the 230s. I will DC back into it, but as of right now, at current prices, it's setting at 262. I'm just going to wait and buy other things. I love the company. I think it's got a great future ahead of it. Just started paying a dividend, so I'm more than confident that they are going to be able to still generate amazing free cash flow going forward and return equity to investors in the form of dividend increases and share buybacks. Next up, United Healthcare. This is one of the best healthcare stocks out there, I feel. Pretty much anything below 500, I'm going to be looking at it. 490 and below, absolutely going to be buying more of it. I wish I would have been able to pick up a little bit more, but I had to start over. I had to start my portfolio over from just fresh, so you're going to be able to watch me rebuild this up for the next 15 years till we hit financial freedom. But this one, 490 and below, is where I'm going to be looking to buy it. It is currently at 570, so this thing is shot up since I bought in. Next up, Starbucks. Really like Starbucks for the long term. And MasterCard, both these down 2%. I am looking to DCA if these drop any further. Starbucks, $74. I think that's a great entry point, and MasterCard under 450 just makes me very happy. They've got an earnings coming up at the end of the month. Actually, end of the month, it's the end of the month. So they got an earnings coming up. I don't know the exact date. Let me look that up real quick. MA earnings. Their earnings is the 31st. So I am going to be keeping my eyes peeled for any pullbacks from MasterCard, because I know the last time that they reported earnings, it was either last time or it was the beginning of last year, they had a massive drop after earnings, and I will absolutely buy this thing up. I would love to see this dip below 400. Ooh, that would be amazing. I would absolutely be gobbling this thing up left and right at that price point. And Celsius, this thing at one point was close to 100. I really wanted to get into it. I use the product every day. I drink the stuff all the time. It got up to, I think it was 96, and I was like, okay, if this pulls back, I'm going to start buying a little bit. So it hit 65, so I bought a little bit. Hit in the 50s, I bought a little bit. Hit in the 40s, bought a little bit. And as long as this remains below 50, every paycheck I will buy a little bit of it and just kind of DCA into it over time. I am a big believer in them long term. Estimated revenue over the next 5 years is like 19%, and whenever I run a cash flow model for that, I get market beating returns. I get like 12 to 15% possible return going forward. Of course, that's just like a little model that I run through Qualtrim. It's not guaranteed returns. I'm not saying you're going to make that if you buy this. It's just I could see that happening with Celsius going forward. And MasterCard and Starbucks, they're both moats. MasterCard's amazing. I could make a whole video on this company and why I love them so much. And Starbucks, people are addicted to their caffeine. I got 2 caffeine stocks out of 5 total holdings. But that's the game plan going forward with the portfolio. Every paycheck, I'm going to be putting probably 300 plus into it. And I'm going to try to hold a cash position going forward. I'm going to try using half of it of what I put in for DCAing and the other half to just set there, because I do see this volatility continuing. We've had some massive red days, massive green days. I think something's going to break. We're going to have a huge downturn, and I want to have cash on the sidelines for when that happens. I will be ready. But that's my game plan going forward with the portfolio. The other thing is my Roth IRA. It's just SCHG. I put $50 into this every paycheck. I do 25 one week, 25 the next week. Don't even think about it. Red, green, up 100%, down 99%. I'm going to be buying SCHG for the next 20 some years, 27 years, something like that. And I think it will pay off for me greatly in the long run. Now, the watch list. We have a lot in the red, a lot going on. Yesterday was a big green day. I'm recording this on Saturday. This will be released on Monday. But we still have some things that were down. Still have a few things that were down. Most notably, Google. I've got my eye on that one. So 3 that I'm looking to possibly buy. Ulta Beauty. Really love this company for the long term. They have fallen from their recent high of this got up to $567. It's now $369, so it's fell over almost $200 in just the past couple months. So I definitely have my eyes on this one. As you see, revenue quarter over quarter, very consistent growth. Store count is going up with this one. Great EPS. Let me see if I can refresh it and get the free cash flow to load in. Yep, free cash flow. Everything's ticking right in the right direction with this company. They got a little bit of debt now. That's no worries for me. It's completely manageable. Shares outstanding. They keep buying back shares, which I love to see that. Absolutely love that. But yeah, look at this. Free cash flow, EPS, everything is just ticking in the right direction with this company, especially share count. I love this. But when will I be buying Ulta Beauty? I would like to see this hit 350 below. It's a consumer stock. I give it a little bit more of a margin of safety with this one. So if this one dips down, and it's gotten close, it has definitely gotten close. Let's see, over the past 5 years, we've definitely had buying opportunities in that area. So if this was to dip to the 350s, I might even start a position at 350s. We'll see, but I've definitely got my eyes on this one. Next up's Google. I don't know how much more I want to wait for this to drop. 167 looks very appealing to me. This thing at one point year to date, I think we cracked over 190. Yeah, we're down to 167 now. I've absolutely got my eye on this one. Dividend, they started paying a dividend, which is very nice. Their cloud operation margins are positive now, so I think that's just going to help them more than anything going forward. And look at this revenue. This revenue is just going up and up over time. Again, a lot of things ticking in the right direction. They have a ton of cash on hand. They're buying back shares. Share count is just continuously going down. There is a lot to love with Google. And the people that bought this in the 80s, man, I'm jealous. I am jealous. Let's see here. This had a massive dip back here in 2023. Yeah, the people that bought this in the 80s, like, I clap my hand for you guys. Yin's killed it. I've learned a lot from this last, from the 2023 crash that we had, and then the 2023 to 2024 bull market. I have definitely learned a lot when it comes to just investing as a whole. This is one I regret not buying, but I've definitely got my eye on it. It's taking everything in me not to start a position now. I'm going to see if there's any more of a pullback. We have a couple more red days. This is absolutely going to end up in the portfolio. And next up is Chipotle. This one is another one below $50, so it is below its. It had its pre-stock split price. I think it was like $3,000 when it did that. Crazy, but this is another one that has caught my attention. As you see, revenue growth very consistent. Chipotle's are opening up. Average unit volume is increasing. Free cash flow, EBITDA, EPS, everything is just ticking in the right direction. Again, they got a little bit of debt, but that's nothing to worry about. And they're slowly buying shares back here and there. Hopefully that's something they can continue doing. But I still think it's a little bit pricey at its current valuation. But, yeah, this thing's just, it's been on a run. It has been on an absolute run over the last 5 years, up over 200%. It's crazy. But, as I said, Ulta Beauty, 350s possibly. Google, any day now. I see this thing dip below 160. I might just start a position and just DCAN, to be honest. Just a smudge more of a pullback. And with Chipotle, I would like to see this below 40. That's just what I would like. Again, this is a consumer, and I give those a little bit more of a margin of safety than I would a tech company. So those are my price targets. Again, those are my personal price targets. I'm not saying that's when you should buy. Always do your own research. But those are the levels that I would personally be comfortable buying and holding those companies for the long term. So I hope you enjoyed that quick little peek at the portfolio and deep dive into my watch list and the 3 that I'm watching the most closely. Hit that like and subscribe button for more. And until next time, take care. See ya.